One would think, well, with the valuations going as they have been for the United States, and just with the data that I've pointed to, S&P up 15.5%, many analysts keep saying the rise of those tech players, the rise of the concentration, as it were, at the top of the U.S. stocks is going to continue. So why would you be overweight Europe? It's a big call, isn't it?
I think we'll see a broadening out. So also in Europe, as I mentioned, right, we had the first move up in markets was in tech and industrials. So also industrials were doing very fine, right? They're also benefiting from electrification and all those thematic events. But outside of that, we're also seeing earnings growth come back, right? In staples, what a boring sector, yes. But in a more volatile environment, as we now experience, you might want to go for staples as well. You've mentioned basic resources earlier. They've been underperforming. They've been basically flat for 1.5 years. Yeah. But we also see here turning point in earnings. So they might also benefit. So I think this performance is going from being very, very focused on tech more towards other sectors, which should be beneficial for Europe. And you mentioned valuations just now. I mean, look at the US. They're trading at 20 PE, right? Yeah. We think that's a fair valuation. In Europe, we had 14. I'm also saying relative to rates, that's actually not too cheap, but I have more upside potential than I have in the US on PEs. On earnings, we expect 9% earnings in the US, but that's consensus. For Europe, we expect 5% earnings, and consensus is 0.
Sure, but you don't get the same revenues, though, right? And that's really the earnings potential here. That's what you look at as well, right? If you're going to say, sure, valuations, 2021 versus 14 in Europe, and you see the upside in Europe, it's because maybe you're not getting the same revenues as you would in Europe as you would stateside. Is that not something that perhaps you look at and think, oh, I'm not so sure? Or is it a case of, well, steady as she goes is actually the way I want it right now in what is a volatile market? Yeah,
so, zooming out very far, I would say US very long term is probably going to grow stronger. They have such an advantage in AI. They have so many other advantages. They're very, very, very dynamic economy, and we're a little bit struggling as we see right now in Europe, right? But looking more out for the next 6 to 12 months, I do think that Europe has potential. Valuation is just the consequence of the other factors. So we see a recovery in economic growth in Europe, which people are underestimating in my view, because of those short-term events that we have. We see a recovery in European earnings, better than in the US, in the relative trajectory, right? So I think people will start to look back at Europe, and especially what I like most within Europe is actually small caps. They haven't been benefiting from any of these trends over the past 2 years.
Max, I only have time for one question, but I have 2 points. You're still liking European small caps for the next 12 months, and I want to talk about just generally the second half of the year. What are you seeing there?
So small caps, may I talk about that a little bit more, because I love it.
Yeah. Why that?
Yeah. So, usually small caps would be trading at a premium versus large caps. Why is that? Because on the longer term, they grow faster. Yeah. So if you have 10% earnings growth in large caps, you typically have 15, very simplified, in small caps. Sure. That's a long-term trend. So they outperform. They are more dynamic. Right now, the market is, for the first time in 25 years, putting a discount on small caps versus large caps. That might be, like, if you expect a recession, I would agree and say, okay, there's more downside potential for small caps short term, but we no longer expect a recession. And the recession is still priced in those relative valuations. So I think small caps is the place to be right now. If you just have this catch-up in valuations to large caps, you could have a double-digit relative outperformance of small caps versus large caps. And that's part of this trend from very concentrated markets in tech, in industrials, to a broader rally in other sectors.